the US stock market is experiencing a significant downturn. This decline is primarily driven by the escalating trade war between the United States and China. President Trump recently imposed new tariffs on Chinese goods. China retaliated swiftly. They slapped a 34% tariff on all US goods. This tit-for-tat exchange has rattled investors and sent shockwaves through global markets. The impact of these tariffs is far-reaching. They threaten to disrupt global supply chains. Companies are bracing for higher costs. This will likely translate into lower corporate earnings. The specter of a full-blown trade war has cast a long shadow over the market. The market's performance reflects these growing fears. On April 4, 2025, the Dow Jones Industrial Average plunged by over 2,200 points. This represents a drop of more than 5%. The S&P 500 and Nasdaq also experienced substantial declines, exceeding 5% and entering bear market territory respectively. Investor sentiment has been shaken. The CBOE Volatility Index, a key measure of market fear, has spiked to its highest level in months. Investors are clearly concerned about the potential for further losses. Many are moving their money into safer assets, such as bonds and gold. This flight to safety is another indication of the unease gripping the market. The trade war's impact is being felt across various sectors. Technology stocks, particularly the so-called Mag 7, have been hit especially hard. These companies rely heavily on global supply chains and are vulnerable to disruptions caused by tariffs. The energy sector has also taken a hit, with oil prices falling on concerns about lower global demand. In response to the market turmoil, several companies have delayed their initial public offerings. Klarna, StubHub, and Chime are among the companies that have put their IPO plans on hold. This reluctance to go public is another sign of the uncertainty that pervades the market. This market decline has drawn comparisons to previous downturns such as Black Monday in 1987 and the Wall Street crash of 1929. While the current situation shares some similarities with those events, it's important to note that the global economy is very different today. The Federal Reserve is closely monitoring the situation. The outcome of ongoing negotiations between the US and China will be crucial in determining the market's future direction. A negotiated settlement could restore confidence and provide a much-needed boost to the market. However, if the trade war escalates further, the consequences for the US and global economies could be severe.